Okay, so today's October 25th, 2016. I'm going to be going over this webinar tonight is in well, where's the freaking thing? Oh, there we go. There we go. Okay. So, the title of this one is Trading Starts with Your Mind, Not Your Money. Obviously. Okay, here we go. The truth versus fiction about trading. A lot of people think day trading is easy money. I'm just going to read them out first and then we'll kind of go over them. A lot of people think day trading is easy money. They think that all traders are making money all the time. A lot of people think that experienced traders do not break rules. People think having a huge account ensures success. Some people think that having a financial background makes this easier. And some people also think if you just trade what someone else is trading, you should be successful. So these are the truth versus fiction part of the webinar. So day trading is not easy money. Day traders, experienced or not, are not making money all the time. And experienced traders do always we always break rules because you know what? Sometimes we have biasness. Sometimes we have conviction on a trade that may not be the right conviction, sadly. But sometimes we have convictions that we take strongly, and we end up losing on trades. So we do break rules sometimes. I think all traders break rules. I don't care if you're experienced or inexperienced. You do break your own rules sometimes, and sometimes it works out to the benefit. Sometimes you would add into a position or something where you really shouldn't have, and the trade actually works for you. Sometimes you would stay into a trade longer than you should have, and it actually comes back and works for you. Consider it lucky in some respects, because if the trade actually fails on you and you're still in the trade and it comes back and work for you, I think you should consider yourself lucky. Having a huge account ensures success. A lot of people that I've met have had smaller accounts and feeling that they can't really cope with the market because their account size is just not enough. And some people that come into the market think that because they have a lot of money in their account and they have a big supply of funds, that they can just take bigger trades or do riskier trades, and eventually something's going to happen for them. Eventually something's going to work out and they're going to land that big trade, but it just doesn't work like that. A lot of people also with financial backgrounds think that this is easier. I've had a lot of people that are CPAs and financial in the sector itself, in banking, and they come in thinking, well, I'm really good at math. I've studied all this stuff in college, and obviously day trading is should be simpler for me than it is for the average Joe coming into it, but it really isn't. It's a completely different feel. It's nothing that you've studied in school. Has really, I mean, hardly anything that can really help you unless you're really good at reading cues and PRs, and maybe that'll help you. But as far as the as far as the angle of trading itself, having a financial background really isn't going to make this much easier. And a lot of people also think that trading what someone else is trading, for example, following somebody on Twitter or getting some sort of an email, that you're gonna ensure success, but it just doesn't work like that either. So let's run into the next slide. The beginning. So this is the beginning when most traders start. They mostly take long trades. Obviously, they do that because shorting seems to be more difficult and more complicated. When you started trading, it was basically, if you're starting off fresh, I'm thinking about, you're more thinking long side, right? You're buying low, you're selling high. It's a easier task. Hardly when you start off day trading you really think about shorting stuff. very rarely have I seen where somebody jumps into day trading as a start and they say, okay, well, I'm just going to be short biased all the time, or that's the kind of trader that I'm going to be. For the most part, when you get into day trading, you're really thinking just on the long side. You buy something low, you sell it at the high, and that's just easy money. At the beginning, a lot of people, and the reason why I put a dollar amount here as some sort of a daily goal is because it comes back into play later on in the webinar. So let's just put a number at it where a lot of people try to make $250 a day. Just a number, and you'll see the reference to it when I come back later on. Um, at the beginning, don't take any losses because they will all turn green eventually. So that's the mentality of a lot of traders as they start, and you'll end up with and many of you guys who have experienced this or probably are experiencing some of this, where some of your trades are red and you sit on it because you're thinking, hey, well, you know what, eventually they'll come back green and I'll get out. And so a lot of newer traders at the beginning, they don't take losses, or they're too confident in their trades to take losses, too stubborn to take losses. And I've seen and I've witnessed that a lot of people who are used to getting things their way. And I'm not saying that has to do with personality or anything, but sometimes maybe in your field that you're in, maybe you're in a I don't know, a better field than some other rest of people, and you feel like, things should work out for you, and they always usually work out. And when they start day trading, they end up losing a lot of money because of that mentality that I'm always right, and so they don't take losses, and they feel like, things will turn out green eventually. That's just part of the beginning. Sorry guys, I'm dealing with a sore throat and a cough thing going on here. At the beginning, stops are for suckers that are willing to take losses. And so at the beginning, a lot of people feel like I should not be trading with stops, not because I don't know how to use them, but because I don't feel like they're necessary. Like, I feel like at my trading level, whichever level that is when you're coming in, that you feel like if I'm putting a stop in, I feel like it's always getting hit. I'm always losing money when I put a stop, so I just won't put a stop at all. And so at the beginning, the mentality is stops are for suckers that are willing to take losses. And at the beginning, it's the I've got a feeling trade that are executed without hesitation. I got a feeling somebody's gonna beat on their earnings. I've got a feeling that somebody's gonna get bought out, or I have a feeling because my friend told me that his aunt works at this biotech company, and all those I've got a feeling trades. It just really um, doesn't really bode well for your account. So at the beginning, all that I got a feeling trades that you take without worrying about it, because why? Because you have a feeling. So you have a gut feeling that something's gonna work out in your benefit, and you somehow get over the fact that they may not be proper trades to be taken. They may not be set up properly. They may not be bullish or bearish, whichever your angle is. But the charts are not setting up the way that they should. But at the beginning, you still have that feeling, that gut feeling, and those are the trades that you tend to end up losing on because of that. I've got a feeling trade. Next slide. The progress. Okay, so this is after the beginning. I'm kind of trying to walk through like a stage type thing. So that was the beginning. This is the progress. So now you're in this mentality where I'm getting really good at this trading thing. I don't understand why people said this was difficult in the first place, and I need to increase the size of shares that I trade so that I can double my returns. And at the end, you're at a point where you're saying to yourself, well, I knew using stops was a bad idea. They all came back green. So you're in a part of your trading process now where you're actually making money even as a beginner. you're making money, and a lot of people call that the beginner's luck. And I'm sure a lot of people at the beginning of their trading careers have actually had really good beginner's luck. And so you're really good at this. You don't understand why people said this was difficult, because it's just so easy for you. You walk in, you see something, you like it, you got that feeling about it, you hit the buy button, you end up selling, you make money, you leave. So you're at that progressive stage where you're feeling like, okay, I'm on top of the world, like I know exactly what I'm doing, and this day trading thing is a lot easier than I thought. Then you get to the realization point. So you get to that point where you're not making any money anymore, and in fact you're actually losing money. And so you figure, maybe if I trade a lot of shares for smaller moves, that you can have green consecutive days. Maybe if I follow somebody on Twitter that's successful, I can be successful myself. Maybe you're thinking, maybe I'll suck it up and join a chat room. But of course, it has to be the cheapest chat room, because they're all the same. They all just give alerts, and they all just have a screen up, and they all just talk to you all day long. And my daily routine isn't being normal anymore. This is a realization part, okay? You're realizing now that a lot of things are that are changing, but they're not changing about your trades. Right now, that your changes are kind of happening in your mind only, right? You're realizing that your daily routine isn't being normal anymore. You're on edge with yourself. You find yourself on edge with your family, because now you're starting to lose money, right? And then you get to a point where you're thinking, how come every trade that I take goes against me? And then at the end, you're like, I can't believe I just lost all this money when I started day trading. And so you go from a point where you're at the beginner, where you really don't know anything, but you figure you just want to go long on stuff, and you trade off instincts. And then you get to the part where you actually hit that beginner's luck, and you're making some money. And now you get to the point where you're realizing that it isn't that simple, and you're actually losing money. Okay, so that's just like 3 stages there. The breakdown. Okay, this is where you hit a wall. um your account's dwindling, and things are not working out the way that you thought that they were going to work out. So you end up hating the market. Everything about the market you hate. Everything's rigged, and and people are just out to get your money. Everybody's lying to you. Nobody's actually successful doing this as a day trader. This couldn't possibly be a profitable day job, because you're losing money. You had a lot of money, and now you find yourself just consecutively losing money. So you're thinking, this is just not a good way to make a living. And obviously, well, I went over this. Yeah, obviously, the traders that are making money are all lying. And this is the breakdown. This is you thinking about stuff, okay? I don't care about my money or my trades anymore, because I know they're gonna go red. And this is the point where you're completely broken now, okay? At this point right here, I don't care about my money or my trades anymore. I know that they're going to go red anyways. So how many people have gotten to that point where, when you take a trade, you kind of almost feel like, well, this one's gonna lose anyways, or that you put a stop in, and you say, well, I'm gonna turn around for a second, and go get some water, and I'll come back, and I'll probably be stopped out, most likely to be stopped out. Like, how many people have gone through a stage like that in their trading career? And then you really completely have been broken down so much, where you're thinking now, well, I've made the worst financial decision of my life. And yeah, you guys could private message me. And so this is where you're broken down. You're completely, you started off with money, you made money, you lost money. Now you're down on yourself. You're feeling hopeless. You're feeling that this is definitely the worst thing that you've ever tried to do. Maybe you've lost all of your savings. Maybe you've borrowed money. Maybe you've taken a loan. So this is the point where you're at now, okay? The very, very downside of the trading. Oh, but it gets worse. Sorry. The comeback. So, you've been paper trading for a while now, and you feel you've got this. You you you're green on all your paper trading accounts. You're making a lot of money on your paper trading accounts, and so you've stepped out from the real trading, and you've stepped back, which is a good thing. You're deciding that, okay, well, this is something that I want to do, and I'm gonna continue, but I gotta learn somehow, right? So you're paper trading. Now you've paper traded for a couple weeks, and now you're ready to come back in. So you think, if I can make all this money on paper for a year, you could make millions, of course, because paper trading is just, it's so easy. You buy it, and then you sell it, and you don't mind holding it for a couple days, right? Because obviously it's not really actually doing anything to you. It's really just not real money, and if you blow it up, you just hit that reset button, and just like that, you got another 100K in there. And so you take bigger sizes. You make a lot of money paper trading. Who haven't made a lot of money paper trading here? I mean, I have had paper trading accounts with $2-3 million in it, and really it's just paper at the end of the day. So the comeback. You found yourself a strategy that works. Is it the 813 strategy? Maybe. Maybe you found one of my old videos and you watched it and you said, hey, this dude maybe it's onto something. Let me just use that strategy. Maybe you found a strategy that works. Maybe you set up your chart like I did, for example. Just say you watched a video and you like how it's set up with the indicators and the time frames and whatever. And so you're thinking, oh, well, the problem was obviously I was using wrong indicators. I was using the wrong charts. I didn't have the right scanners. I didn't have the right news feeds. So, and you also got yourself into a chat room. Um, and it's great. The chat room's great. All their calls are hidden home runs. And you're paper trading still. Okay, so just remember that you're still paper trading all throughout this. So, you got yourself paper trading, and you got yourself some great calls. You got scanners, you got indicators, you got strategy, and your charts are set up perfectly. Alright? And your Twitter following is growing. This is the most important one. Your Twitter following is growing. So that means that you are finally doing something right. No, you're not. So you're finally doing something right here. This is your comeback stage, right? Now you're all secure. You're ready to go, and you're ready to make this happen. So let's see what happens next. This is the new me meeting the old me. Remember the old me, the guy with a lot of money? The new me, the guy with the strategy and the paper trading account making a lot of money, right? So you've funded all your account, and you're ready now to make this work. So you're ready to take this on head first. You're excited. Okay, I put that in bold because I'll bring that up reason why. You're excited. Gosh, I can't even make a circle. To make money. You don't even need to spend so much time at your computer anymore because the trades that you're making are just badass. And the money that you're making is obviously incredible. And this is still with the paper trading account, okay? And so what you end up thinking in your head now is, I don't need. First of all, you're excited, which is bad. You don't need to spend so much time at your computer anymore, which is bad. And now you're thinking you just do a couple of these great trades for the day, the ones that everybody else is making a ton of money on, and then you'll leave for the day. And now back to that first part where I said that you should only, your first target was $250 a day. Now you bumped it up because you're paper trading. And you're making a lot of money. You bumped it up to $1,000 a day. That's what you want to make now. Because you've refunded your account. You have more money in there. You have everything else that has to work. You have your strategy. You have your scanners, your indicators. You got yourself a great chat room. And you're ready to go because you're just banking money paper trading, okay? Next slide. Then you get to the "Are you kidding me" stage. Yeah, you've been there. You have all been there. Are you kidding me? For real? Every trade that you're taking isn't working. You cannot find a balance. And the account's going down faster than the first one did, but you know twice as much. And this one will make you laugh, 'cause you know it's the damn truth. You can't tell your spouse the truth, because you just can't. You've convinced her, you've convinced yourself that you're good at this. You've paper traded enough, you're making a lot of money on paper, and you've convinced yourself and your spouse that this works. It's going to work. I'm making X amount of dollars, and if I time that by, by the amount of trading days that I'm gonna have for the year, we should have whatever, $1 million by the end of this year. We'll pay off for the house. We'll buy 2 brand new cars. We'll put that pool in that we wanted to. So you've built yourself up so much now, and you're starting to lose money. You can't tell anybody, and so that starts to burden on you mentally. So you're using your strategy, you're using your indicators, but what's wrong? Trying to figure this out. You're taking all the trades in the room. You're the only person that's just not making money. So that's the "are you kidding me" stage. Slides are going through pretty fast. Okay, the issues. Now we're going to start trying to fix some of the issues that we're encountering. So some of you may be sitting here thinking, how can he know what I did or how I felt? Well, I'll tell you how, because I've been there. I've made all the mistakes that you're making or made. Even when I found the strategy that I use today, which is the 813 strategy, and the chart setup that I've implemented, I still wasn't being profitable. So I found my strategy, and this is myself a little bit. I found all my chart setups, and I still wasn't being profitable. Alright? So if you're at that stage, or just got through that stage, or currently going through the stages that I just mentioned before, I mean, you guys can talk. I just definitely want to hear some kind of input. I mean, you don't have to wait for me to finish. I can respond. So this was me, where I found what I thought I needed to find, and still losing money. So if you're here at that stage, just hold on. So what I did was I stepped back for a while, and I evaluated everything that I was doing. Most of my losses came in huge sizes. I'm going to clear this, and I'll recircle this. Most of my losses came in huge sizes. My gains, follow me, came in smaller sizes. Okay? Are you guys all seeing the screen, right? Reload, please. Thank you. Eric, if you can help that guy that can't see the screen. Okay. So most of my losses came with huge sizes. Most of my gains came with smaller sizes. There's obviously something not working there, right? So I had more gains than losses. But the problem is, my account was still going down. So what was going on? So I was making money. I was just not being able to take my money. And that was a big problem for me. I was making money, but I couldn't take my money. And you'll probably end up in a time like that for yourself, where you're seeing greens. Some charts are green. Some charts fail, sure. If you're 100% winner, then good for you. But charts fail. Trades fail. But you're seeing green on your P&L. There's just point of the day when you don't take any of that money. And you find yourself holding losers, and you can't hold winners. Meaning that your red trades are obviously a lot higher, and your green trades, you're actually just cutting them short. And you can find the right setups, and you can effectively execute a green trade. But you only exit in the red. Okay. So the issues, this is what we're going through here, okay? You're finding the right setups. May it be formations, double bottoms, double tops, flag breakouts, inverted head and shoulder, whatever patterns you have, whatever formations you're using. You got the right setup. You can get into your trades properly. You know where to get in. If that's a flag and that's the breakout, you know you're getting in. That's fine. You got money coming in because this trade's working for you. But you seem to only exit in the trade in the red. Means that the trade failed and then you're exiting here. So you're coming into a trade where you're green, but you're only exiting when you're red. We're going through the issues here, okay? Let's go to the next slide. The solution. So for me, and a lot of this came from me just kind of thinking out loud when I was writing this stuff, and a lot of it is personal experience, okay? And a lot of it's gonna hit home for you guys, because it's the exact same thing that I've been through. That I feel like a lot of you guys who are just starting off, or maybe in the stages that we mentioned before, that you're going through. And so maybe if we can try to work through some of that stuff, then we'll accomplish something tonight. So for me, my solution, I realized that I changed every aspect of my trading but my mind. I was having great setups, check. Entries, check. Formations, check. Platform, check. Strategy, check. I got my news feed. I got my scanners. I got that chat room. My Twitter following is growing. I was improving on everything but my own self, but my mind. So I started to kind of think about, if I was a robot, and I'm going to try to draw here. If I was a robot, this was a chart, it went up, chart pulled back, finding a base, broke out to the upside. If I was a robot, I would be long, yes? And so I started to think like a robot. And I started to say, well, you know what? If I had an algo program and I set my program to take a trade over a trend line break, or whatever the program would be set for, then I should be taking that trade into the long. If I also set my program to take a certain amount of money as the trade works, say for example, this entire range over here was worth $1, and then when the chart broke out, I'm setting my program to take 50 cents. And so I started to think like a robot, because I figured, you know what, if I can't do this mentally for myself, if I can't control my own trades or control my own self, then it really makes no sense. And so I started to trade like a robot, or at least try to think like a robot. And so I'll explain some of this as we get through. Let me just kind of read them. Probably it'll help me to figure out what I was saying. Okay. I knew the setups worked, the trades worked, and you wasn't seeing a profit. So I started using hard stops to protect my capital, because that was important to me. At the beginning, I had capital. At the middle, capital dwindling, but I was like, hey, I still got money, I can get money. Got money after I paper traded. That didn't work either. So after losing twice, after realizing that just the money stopped coming in, the wife wasn't so cool about just taking more money to trade, which wasn't working. I started to protect my capital more, and protecting my capital meant that I had to put a stop in. I had to realize the fact that I need to protect the money that I have, because if the money that I have is gone, I'm not going to have any more money to trade with, period. That's going to be the end of that. And the worst thing about trying to Get over the fact, once you start day trading, by the way, it's gosh, it's addictive. You think gambling at the tables were addictive? This is addictive. Okay, once you start day trading, if you're not seriously involved in it and you don't want to take this thing all the way to the end, it burns at you if it's a weekday and the markets are open and you're not trading or you're not involved somehow in your day trading world. It hurts you. Like, you can't just sit around and be like, oh well, I'm not day trading, it's so cool. It's okay. If you got this in your blood and you've got a taste of the money that comes into the trades, and you've got a taste of winning, you've seen how it can work for you. Once it's in your blood, it's hard to get it out. And so once you realize that once you get some more money back into your account, that's priority number 1 right there. Protecting your capital. Because without this, you can't trade anymore. You can paper trade for your entire life, but that just does not pay the bills. Um, Protecting your capital is definitely number 1. Because without that, you got nothing else. Okay? So I understood that all my trades weren't going to be winners, but I also understood that losing some money was part of this game, and that's all about protecting my capital here. I enter trades with my account in mind first. Now the reason why I'm stressing this obviously, and this has to do with that, but I'm stressing protecting your account because it's all you have. It really is all you have. What else do you have? Do you have anything else that's tangible when you day trade? Um, there's nothing else that you have besides the actual money that's in your account. And if you're day trading with real money and for real gains and for a possible career, then that's the main priority that you need to set in your head. Just write that down somewhere on a sticky tab and stick it on your computer screen. Protect my capital at all costs, meaning that if the trades aren't working for you, cut them. Put a stop. Use those things to protect your capital. So let's continue. Um, I also realized that I had to figure out what's my risk, and obviously that's another one. Gosh, I just wrote a lot of stuff about protecting my capital. That's another one that obviously comes back into protecting my capital. I gotta evaluate what's my risk, what's my reward, and why am I taking this trade? Not just because somebody on Twitter is taking it, not just because you have that really cool gut feeling going on, but why am I taking this trade? Why is this trade something that I should take instead of taking another trade? How many factors of this trade are lining up for me where I am confident enough that it should provide some sort of a profitable outcome? So in the evaluation of finding a solution on everything, you have to figure out what's your risk, what's the reward, and then why. Not just the trade itself, but why am I taking this trade? Am I taking this trade because somebody says it's going up or down? Am I taking this trade because everybody's talking about it on Twitter? Am I taking this trade because I don't know, I like the name? I mean, why are you taking the trade? It has to be a good enough technical or fundamental reason why you're taking the trade. I also learned the importance right here of compounding gains. Very, very important. Okay? Remember at the beginning when I said 250? 250 a day. I'm writing with my mouse, okay, so it's a little difficult. 250 a day. You times that by 5 days a week, right? And you have yourself, what, 750? 5, yeah, right? 750 a week? Okay. And you times that 4 times a week. God, I'm gonna need my calculator. 4 times a month. Thank you, Dan. You guys are so cool. 1250. Give me the other number, Dan. Times that by 12. 12. I know that's not 5. I'm gonna erase this, Dan. Killing me here. Squeak, squeak, squeak. Thank you. Per year. Am I right? I'm gonna freaking bring my own calculator out. 7, $250 a day. 5 days a week you're trading. $750 a week, yeah? Times it by 5 days a week. Did I do 4 days a week? Like, have I stopped trading on one of these days? I'm just so weird. Isn't it incredible? Yeah, what? Start this crap over. 250. Oh my god. I told you guys I'm a little fried. Nobody wanted to believe me. That's $1,250. How's that? 250 times 5 is 1250. Okay. Times 4 is 5 grand. Times 12, $60,000. You guys are so much smarter than me. I tell you guys, you don't have to be a mathematician to be a trader. You guys are way better mathematicians than me. I told you guys I was a little fried, bro. Okay. So, you start off with $250 a day. 5 days a week trading, $1,250 a week. Times that by 4, $5,000 a month. Times that by 12, $60,000 a year. $60,000 a year, making $250 a day. Now, a lot of people don't see that as being a lot of money, and that's okay. Maybe your account's bigger, maybe you're used to making a lot more money, but it's still a lot of money. And so, yeah, I'm way better not at this right now. So $60,000 is a lot of money. Okay, and for most traders, $60,000 should be a lot of money because it is a lot of money. And if you were to compound these gains into building an account that actually had $60,000 in it at the end of a year, can you imagine what you can do with that as your capital now, instead of whatever you had as your capital before, $5,000 or $10,000? So you're not thinking so much as this, as, oh my gosh, that's not enough to feed my family, or that's not enough to really support my lifestyle. You're thinking as this. Follow me on this one. Thinking about what can I do with this, because I only started with this. Okay? I started with this and I made this. What can I do now with this after a first year small gains? You know, put my trades to work, put my account to work seriously. I started up from this to this. What can I do with this? Well, besides that, you can take this and make it into a whole lot of money if you can take from here to here. Now, in between of this, obviously, you have to start with a smaller gain. Now, how is it when... Okay, let me skip this for now, because if I start talking about this, I'm going to talk all night. That was this, compound gain. I learned how to accept losses, meaning that, obviously, stops are in place. And I learned how to move on to the next trade, which is a very difficult thing for a lot of traders to do, to try to figure out how to move on to the next trade. If something isn't working for you, if a trend's going like this, and every time you see a hiccup in the chart, you're long, you're long, you're long, you're long, you're long. Meanwhile, you just don't see that. You know, a downtrend's a downtrend, and respect that, right? So I learned how to move on to the next trade. If I try bouncing something, I'll try twice, most times. If I'm trying to try to bounce something that's going up, that's going down, or try to catch a top on something, most of the times I'll try twice. I'll give myself the benefit of the doubt that maybe the first time didn't work, and obviously I'll stop out wherever it breaks, and then I'll try it again. And if it fails again, I usually won't look at the chart. I'll put it on a side chart. And when it completely reverses, that means that, like, if this chart was working like this, when it completely reverses and starts coming up like this, makes a higher low, that's the only time that I'll look at it again. Because at that time, when I'm looking at it in this formation here, it has to be almost a perfect criteria setup trade where I will only take it if it's going to meet all of my criterias. If I clear this thing, it's going to delete everything. Damn it. I have too much stuff on my chart here. Okay, fine. I'll clear it. Okay. And the most important part for me was I always remember what I did when I started, and I make sure I try not to duplicate that. Now, when you break rules, sometimes you end up doing some stuff that you will say to yourself, I cannot believe I made that rookie mistake. And who haven't broken their rules? And who haven't done something that they were like, are you kidding me that I just bought like the high of day, um or I just bought this for a swing, not even checking that earnings is next week. um how many times have you broken your own rules, even in an adjusted state where you're at, where you're a better trader, you're consistent, you're confident, you have things working for you. You make mistakes. You're human. You make mistakes. You take a trade that just doesn't work. You go long into what could seemingly be a double top somewhere, and you just didn't see the double top, and you're long in the trade, and then you're thinking, well, I just kind of almost bought the high of day there. There are a lot of times that traders are trading with us, and so they'll go, okay, I'm ready to add into the trade. Meanwhile, they won't see like a double top from yesterday, a high of day from yesterday, just right there, and you're about to add into a long trade, and turns out that the high of day gets rejected, and chart comes down hard on you. But there's a lot of things that you would do that that would that you would just look back and go, what the hell happened? How did I manage to get myself at this point in my career into a trade like that? But it happens. All the times it happens. I've shorted stuff and been so confident that it's going to work and it not work, and I lose on it. Sometimes I lose a little bit more than I want to, but I haven't really taken a really big sizable loss in a very long time, knock on wood. But I lose more than I want to because I end up investing a little bit more because I was so biased on a certain angle or something. And I end up losing more than I want to, and I break rules all the time. If you don't think I break rules, I mean, ask around. Every single person here breaks rules. It's just part of the thing. You break rules. Is it your fault that you break rules? No. Yes. Were you intending to break rules? No, definitely not. Is that your intention when you woke up this morning? I'm gonna break all my rules. No, but it happens. You take something that you shouldn't have. It didn't hit all your criterias. There were no. You're trying to do a double bottom, and you see the chart pattern, but there's no buyers here, and you still go long into it. So there are things that happens all the time, and these are just human nature flaws. And so these are things that you wanna try to avoid doing as much as you can, but it's just not guaranteed that you're gonna do it. So the solution for me was my mind. Okay, it was my mind. It should be your mind. It's always your mind. Your mind controls everything that you're doing in your trading. You should wake up every day and you should be excited, but not too excited. You should be um, anxious, but not too anxious. You should be thinking like a job. Get up every day and you do your morning routines, and you get ready for work. Okay, don't come sitting in front of your computer. I'm gonna talk now. Don't come sitting in front of your computer and in your PJs, not brushing your teeth, and just feeling like you just can just do this whatever. Get yourself in um a mental like routine where, okay, I'm going to take a shower, and you don't have to put on a suit and tie, but you have to be ready to work. This is a job. And you need to take it seriously. Don't sit in your PJs and hang out on your bed eating Cheetos or something and trying to take a trade. It's just not. This is not something like that. If your money's real, then your trades should be real. Okay. If you're putting in real money into your trade, then give it some respect. And when you're making real money, give that some respect. Okay. So it is. It is very. I mean, and if it's not serious enough to you, then your bank account isn't serious enough to you, and your bills that you pay isn't serious enough to you. So this is a job. You gotta take it seriously. You gotta train yourself to be to be I don't know, to be serious about it. Gosh, I'm lost for words tonight. You really gotta train yourself. You gotta train your mind to say, hey, you know what? Just shut up, relax, take it easy. If I'm on a good trade, good. If I'm on a trade that's going up like this and it pulls back, trade goes here, breaks over the area, retests that area, and I'm on a good trade, I want to add here. And then I want to play it on the long side. But if I'm in a continuous trade and the chart's giving me a continuous trend all the way upside, and I'm making money as the trade goes on, say I came into this for some odd reason, whatever the reason was, and I'm long on this trade here, I don't want to get excited throughout the entire trade. At this point, a lot of people are feeling, okay, well, it's done. I'm going to dump my trade. Comes over here. Your chart breaks over. You're like very excited because your chart just broke through. Now you got a new high. Came back over here. You're thinking, oh, God, it's going to fail. But if you were to just respect the bigger picture on the entire trade, you could keep yourself in a calmer situation. And for me, I mean, anybody that trades with me, they know that I can be up or down, and you really won't know because I keep myself calm as much as I can. If listening to music helps you in the background, then that's good. I mean, it's not it's something that I do. I listen to music every single day. I used to listen to music when I study, and I listen to music when I trade. And if that helps you during the day to stay calm, then do that. Um, and get criterias for your trades. I think I went over this. I don't know if I did this on a webinar, but I know I did this the other day. Your criterias for your trades should be set out. You should say, I am only taking a trade if X, Y, Z adds up. Um, you should only be taking a trade on a flag breakout if it retests, if it has volume. If my moving averages are over the 50 EMA or whatever your criterias are. But but make sure that you have some kind of criterias that are gonna keep you out of taking shitty trades. Okay, keep you out of taking trades that maybe you shouldn't have gotten yourself into in the first place. Keep you out of playing maybe some momentum stocks that seem to just, I call them pigs, some momentum stocks that just seems to rush out of nowhere, low float things, and you find yourself playing it at the high of day, and then the thing crashes. Keep yourself out of trades like that if you are newer, because yes, you can make quick money on them, but you can also blow up your account on them really quickly. And so you need to get yourself into a mindset where I am only taking trades if they set up the way that I want them to set up. If my criterias are being met. Maybe you have a list of criterias. I have 5 personally that I need to see on a chart. And obviously you know that I use my 813, and so I use my moving average as one of my criterias. My volume has to be there. That's another criteria. I do use MACD, and that's one of my criterias also. It has to be, if I'm long, A chart has to be over a certain range, which I call the opening range. I play 5 minute time frame, so my opening range is obviously top tick, bottom tick of that first 5 minute candle. And so if I'm long in it, it has to be over there. Most of the times I like to see it over there. And so there are certain criteria that have to be met before I take the trade. And if they are not met, I leave the trade. And a lot of people will ask me, well, if what you like this, why don't you just take it? But I'm I'm not loving it. And if I don't put a dime into it, I don't risk a dime. And so criterias have to be met. Okay. And let's get back to that taking profits thing, okay? How about we just run through the last slide? Then I could just really start talking. Because if you catch me on a talking day, I can talk for hours and hours. You may just sign off because you're so bored. Conclusion. The real masters of trading haven't learned how to conquer the market. They learned how to conquer their mind. They learned that the only thing that prevents you from making this profitable is you. You're your worst own enemy and your biggest fault. Eliminate yourself from the trades. Let the charts speak to you. The markets prey on your human nature. If you can hide those emotions and focus on the trade itself, you will see more profits. The profitable day trader learns how to be aware of the type of traders around him or her by watching the chart and its movement. Now, if you don't understand the last piece here, I'll tell you exactly what that means. You have those high five traders. If you're long on a chart and there's people all around you slapping high fives and screaming off the top of their lungs because your charts are working, that's when you should sell. Okay? When people get too excited about trades, it's because it's overextended to an upside. If you're long, sell. You sell before the selling starts. Exactly. If you're to the downside and you hear people screaming, that's when you buy. So you buy the dips, but you don't wait. You wait for the screams, the panics, the oh my god, the it's too much. That you wait for that to go long. And when you hear people getting all excited and giving each other high fives all over the place, that's when you sell your long positions. That's what the last piece means, okay? But I think that this conclusion actually has a lot of importance in it. And definitely stuff that you really got to take home with you is masters of trading, traders of experience. They have not conquered the market. Nobody's ever going to conquer the market, okay? But they learn how to conquer themselves. They learn how to take trades when they need to take trades. They learn how to take money when they need to take money. And they learn that I'm the only person stopping me from making this profitable. I'm my own biggest enemy. Okay, I take the trades. Obviously, if they are not set up to my criteria and the trades fail on me, was it a yes no trade? It probably was a no trade. Would I take that tomorrow? No, I won't. But you're your worst, and you're your own worst enemy because you're the one that's controlling that button. That buy sell button won't click for itself unless you decide to do it. If you have decided to do it, then in your head you have figured out all of the criteria already that you should have to take a profitable trade. Nobody's forcing you to take a trade. I tell a lot of people, if you're newer in trading, to not trade the open because right at the open is just too much volatility for a lot of new traders. There are a lot of new traders that cannot handle those up and downs. A lot of people that can't handle the gap trades because it's just too fast for them. It's just not something that you're used to. You can't see something pop 3 points on you and then flush in a second, sometimes even in the same candle. You're not fast enough to play with that. And as a newer trader, you have to know what kind of trades are you taking and why are you taking the trades? Are you taking the trades because somebody says it's going to go up? And does it go up? Yes. Does it come down faster than you can put a stop or sell any of it? Probably does sometimes. And so you have to know as a newer trader what time of the day you wanted to trade. You want to be trading sometimes. If you're a newer trader, I tell my newer traders, look for setups at 9:45 and take your trades at 10 because that's when all the crap is done with. That's when all the up and downs are done with. Will you still get a move off the trade? Yes, there are many, many, many charts during the day that you'll find great setups for, and they won't be as risky for your account, because remember, one of those things that you have to remember is protecting your capital, right? So one of those things that if that's a main focus for you, which should be your main focus, if protecting your capital is your main focus, taking opening range trades right out of the gate sometimes may just be too much for you and your account to handle. You may end up seeing 10 of those trades, 20 of those trades, and for the week maybe one or two of them actually work because of the fact that they're too fast for you. If you're a newer trader, stop trying to be the the best trader out there. Stop trying to be all quick and fancy when you're not. Take your time, relax, slow down, stay calm, and play setups. Play setups during the day. There are tons of setups during the day. Simple little things like flag breakouts or double bottoms, double tops, head and shoulders. Simple formation type trades that can get you some money. Now back to that whole thing about making a smaller amount of money per day. A lot of people have jobs where they, let's just put a dollar amount at, they make $250 a day. I don't care where you work at, okay? And they're day trading, and you're up $250 a day, but you don't take it. You don't feel like it's necessary to take that money. So why is it not necessary to take that money when that's the amount of money that you would have actually made at your day job anyways? Because the trading lifestyle have trained you mentally, screwed you up rather, that $250 is not enough money when you're day trading. It's just not enough money to take, so you don't take it. So, thanks Max. Gosh, you guys are smart. So, you're in the entire scope of day trading, the entire picture of it. Everybody's always shoot out these lavish lifestyles, fancy cars, fancy houses, throwing money all over the place, making it rain. And that's the mentality that a lot of newer traders have come into the market with. And that's your biggest fault right there. Because suddenly a couple $100 on your green trades are not enough to suffice those fairy tales. Thanks, Terry. It's just not enough to support your big dreams. Okay, when you get into a trade, stop trying to think about, I'm gonna make $2,000 today. Think about the $250 you have in front of your face right now. If you, I cut my own grass. If you're sorry, I forgot. If you're up $250 and you make $250 a day, try to figure out how to take that money. You're having more winning trades than losing trades. If you only have 50% of your winners, right? 50% of your trades are winners and 50% of your trades are losers. But this 50% you're taking $250, and this 50% you're only cutting it because your max loss is $100 on your stop. Each trade you're making $150 more per trade than your loss. But instead, sometimes it's the opposite. Sometimes it's even worse. Sometimes you'll see this 250, you'll not have a stop at 100, you'll end up losing 500 on each trade. And it happens all the time. Because what? You weren't willing to take that $100 loss because you think it's coming back up. You weren't using stops because stops are for suckers. And if you want to lose money continuously in the stock market, you use stops. And because you didn't want to take this. But you see this all the time. I used to see this all the time. Why do you not want to take this? And I'm just using this as a reference. I don't care if it's 250 or 25. Okay? Just using it as a reference so you can try to feel me on this one. Okay, because I took a long while, and I hope that I can really kind of pound it in here at the passion that I have for it, because it's the biggest gift that you can get right now if you can just grasp the fact that you need to start taking money. You're not cutting your trades short. You're not selling every single amount of it, but you are pocketing money whenever you can. Whenever you see a gain that's a little bit more than you normally do. Okay? Whenever you get to a point where you say that holy crap, or oh my god, or I've never made this much money day trading, or oh my gosh, my wife's going to be so proud of me, or I can buy this, or I can get that. How do you not take that money? That point, that emotion that you just experienced when you say, holy crap, my trade's up so much. Oh my god, I'm up $980. I want to hit $1,000 on this trade. And what happens? You hit $995 and the chart shreds on you. Or the fact where when you're jumping around for joy, you're not supposed to be jumping around for joy. You're supposed to be taking money. That's the point where you take money on your trades. That's the point where you say, I'm so excited. That means that I'm not thinking straight. My emotions are getting control of me here a little bit. Either I calm the hell down and figure out where I want to put my stops properly, or I sell the trade because I'm not concentrating enough to be in this chart anymore. I only add, do I ever average up or down? Look, there's two different types of what you're asking there, okay? Completely two different factors. If I want to short something based on the fact that earnings report were bad and the chart actually popping on me, I know at the end of the day the earnings report are bad. Any pops on something like that is an opportunity to get more for a bigger move to the downside. If I'm trying to short something like a pig, for example, and the chart's up, consolidates, pushes up, consolidates, chart's making a trend like this, and I'm shorted, chart comes down like this, say I take a short position here, consolidates, make a higher low, and pushes out, chart comes up here. No, I don't add here, because that's a failed break. That's a failed short for me, right? My stops would have been here anyways. I would have gotten stopped out. If there's an earnings miss on something and the chart gets wrecked pre-market and it pops out of the open because of shorts that are covering up, people that are taking their money want to get out. Shorts obviously made money from the night before. Chart's pushing up to a certain area and there's resistance on whatever, if you're using Fibonacci retracements or whatever you're using. And it pushes through an area that, say I wanted it to only pop maybe, I don't know, 30% back of this move here. And it pushed up to 50 or 60%. Now I know at the end of the day that they still had bad earnings. So if I'm playing this because of the fact that they had bad earnings, and I get an opportunity to take a little bit more on the upside, I don't add if the chart keeps doing this. I'll add when the chart starts doing this. If you get me? If you understand there, Bob? So even though if I'm red on a trade, I won't add into the peaks. And even if I miss the peaks, it's all good with me. But I'll wait for a setup where I can see something like this. A head and shoulder. And then I'll add when the breakdown here. Even though I'm adding higher, and I am adding into a red trade, I'm adding for a reason. Because the chart now is starting to break down and I have opportunity to bring in some more shares with a higher average. I'm not adding into a red trade like this. I'm adding into a trade like this, which is two completely different averaging into a trade. Now, if your chart keeps going like this and you're short and you keep adding at every single area, that's different. That's wrong. You understand what I'm saying? So that's the difference there between, do I ever average up or average down into a trade? There are certain areas where you should be averaging into your trades if they make sense to you, or if they fit your criteria. But in most times If I'm in a trade and I'm long on the trade and the chart keeps doing like this and I decide that I want to take the short, it has to be for a reason. Could it be a break of this channel area here? Probably something like that. If I take a short position there, my stops are over here. Initially, when I take a position size, it has to be a starter size for me, which I call my fishing size. It doesn't put my account at so much risk. Now, this fishing size for me came about, honestly, when I had the smaller account, when I started trading back. You know, when I started trading back into real money, where I realized that I need to protect my gains. So, whereas I would have been trading, 500 to 1,000 shares, knowing that I still want this amount, but I can't afford to lose that amount anymore, I started trading over here with 200 shares. And then, so I figured out that, okay, if I'm going to lose, at least I'm going to lose 50 cents here, I'll be minus 100 bucks. If I did this or this amount here, I did 1,000 shares on the short side, because that's where I wanted to short it, and then I lost 50 cents, I'm losing $500. So now this area here and this area here became two big factors for me as I started to trade. When I got back into it, I realized that I can get this as a starter instead of this as a full size, and I can manage my account here. I can't manage my account here because you keep doing that for 5 or 6 trades a day, and 5 or 6 days in a row, you'll end up blowing up your account again. So for me, the factor when I started off was I got to protect my account. For me, protecting my account meant playing smaller sizes. Now, even when I got into this amount and I did want this amount here, then it has to come down to an area. See, like if this is a chart here, it comes down to this area. I expect the chart to come here and bounce, right? If it bounces and it fails this area here, and it breaks here, this is where I'll add. I add here. You can't add in an average position. You can't go, oh, well, the short is here. Oh, the chart's working. Let me add here. Let me add here, not knowing that you have support here. So you have to break if you're shorting, obviously, you have to break that support there, right? In order to add. So if a trade's working for you and you go, oh, well, it's 5 cents down, 10 cents down, let me just add, bang. Trade bounces on you. You got 1,000 shares. Your average is stuck right dead center over here. Gosh. Your average is stuck right dead center in the middle here because you added all the way down here. You got stopped out. You still lost money. So for me, break, entry, stop. Let the chart work. 200 shares. Okay, fine. It's doing good. If a chart flushes through here and I never had a chance to add, it's fine. I'll make a point, and guess how much I'll make on that trade? $200. Now, am I going to run away and say, oh my god, I should have added 1,000,000 shares on the way down? No, because that's just hindsight bullshit. I'll end up making $200 on that whole trade because it never retested an area, and it never gave me a reason to add in. Even though a chart's working like this and it flushes from where you got it, and sometimes you do not, and you're not able to add into the trade. Now, if I only had 200 shares and that happened to me, I had intention of adding on the way down, obviously on the retest. Why not add on the pop? Because then I would still be screwing up my average. It's just not, it won't be enough wiggle room here for me, West Egg. It just will not be enough wiggle room. And then if you're adding into the pop, then you're actually submitting to the fact that this is a support. Why did it pop? It popped. Why do charts move? Because of volume. What is actually volume? Money. So, you're telling me that somebody came in here, wanted to go long, put money into this area, causing a pop on the chart. I'm seeing that there's a buyer here, and I'm a short seller. I'm seeing there's a buyer here. Mentally, how does that make me feel? Knowing that there's somebody here that thinking this is a good support area for me to put my money into and go long on it doesn't give me as much of a mental justification to say, well, I want to add into my short on that guy putting his money here. I want that guy's money to fail, and that's why I would add under. Okay, so now I end up with this whole trade, and how much money do I make? $200. And you know what I do? I cash that in. Was it a great trade? Yes. Did I get to add? No. Could I have made $1,000 if I had full size and the chart came down a point? Yes. But what did I do? I just banked $200. And that's it. And so I'll have a lot of trades sometimes. That'll work. And I'll end up making a little bit of money on it. And it's okay. It's damn okay. If I wanna, I usually do one size. And you know what the thing is, Eric, that I'm really trying to to sink in here. The fact that you made $200, not that it's small money, but the chart works so fantastic that you could have actually made a ton of more money, but you're still willing to only take $200 on a trade. I think that's what I'm trying to hit home here. The fact that a great trade, you didn't end up making a ton of money on it, but you still took a small gain. And that's the difference I'm trying to hit this. Because a lot of people on a chart that fails like that, on a short that you caught on the short side, right? A lot of people, you take that entry there, the chart fails, whatever reason, it just totally smashes, and you're upset at yourself that you didn't take a bigger size. Instead of saying, that was a fantastic trade, I'm going to put that in my bank account. And instead of thinking like that, you get upset at yourself. And what do? The chart's coming down, right? Here's what you do. Entry. 200 size, 200 shares. Chart's coming down. Chart break over here. You're very excited. Oh my god, I didn't add. Chart came down too fast. Fine. Chart came down here. What do? Well, the chart's obviously going down. I'm going to add. Why not? Why shouldn't I add? The chart's obviously going down. I'm going to make a ton of money on this short. Start off with 200 shares. Overexcited over here. You add 1,500 shares on the short side. Your average goes right here. You get support off this range. Support off this retest. Chart spikes on you. You're out of money. Full size. Red trade. So, what I'm trying to hit home here with you guys is sometimes a great trade ends up being a great trade with minimal financial gain. But it still is a great trade. And so, exactly, 100 shares can still be $100. And $200 can still be $200. And you add that $200 and you do it again with another trade. Maybe the other trade will give you the support that you need, or the retest that you need. But the point is that when a lot of people see a chart that goes like that, and it's coming down like that, they just go, well, I just need to add size, because obviously it's going down forever. And then a chart hits some kind of a trend line or something, comes down to it, bam, and then you're out of a trade in the red. And you didn't even have a stop in place because you were so confident that you just added your 200 shares. You went full size down here, right at the double bottom, because obviously it's failing, and obviously it's going down. And then the chart rocks out and it screws you over and you lose on the trade. So what I'm trying to say is, as far as that goes, is there has to be reasons and criteria for everything. Even when you add into your trades, there has to be reasons for it. You have to be able to say to yourself, well, why am I adding? If I add into a trade and my entry is here, and I'm adding here, that means my average is here. Okay? It doesn't give me much buffer zone to have my stops. If I'm adding to the trade here, if I started a trade here and I'm adding here, for whatever technical reason it is, my average is here now. It gives me a much better buffer zone from here to here than this guy with this buffer zone from here to here. See what I'm saying? So it's all about adding proportionally in order to protect the position that you have right now and still maintain a trade that you can make money on. For example, what's the point What's the point of adding 1,000 shares on a trade? Jas, what's up, bud? What's the point of adding 1,000 shares on a trade if you could only risk 10 cents at that one point instead of having 200 shares and be able to risk the 50 cents that you need to risk, because probably that's the range on the trade. Probably that's the the ups and downs that it goes through. The guy with 1,000 shares down here only risked 15 cents. He's out quick because that's probably only two spreads and he's out. The guy who could have risked 50 cents because he didn't go crazy and add into the trade actually makes 200 bucks. This guy probably lost $100 because that was his max loss. This guy here, with quarter of his position size, was able to stay in the trade longer because he had a position that he can manage with the risk. He made $200. He lost $100. He has a $100,000 account. He has a $5,000 account. And yet, at the end of the day, this guy is making more money than this guy. So you gotta figure out where you want to be. You want to be taking money and making small money and having a consistent lifestyle? Or you want to be the king shit and add and add and add and have it screw you over? Okay? So, I think that's the end. Wait. Oh, okay. And so, that's the last one. I could have just had it on that. Anyway, if you want to email me, it's at barrymohan@gmail. I think I can actually click on that. That's cool. And Iceman Trading is the chat room that I have. It's really based on for traders that wanna learn a lot about trading. I do a lot of what you see right now. My voice is hoarse because I was talking all day long. But I do a lot of this trading. I use this pen thing, and we mark out areas, we circle spots, we show where resistances are, supports, breakouts. I give you targets. We go through all of the technical stuff. I'm a very technical trader, and we do that by trading and teaching and doing all that stuff together. So if you're interested in any of that, hit me up. That's the email. As far as next webinar, we're gonna be doing a. Can I explain? Can I explain fibs? That's a whole webinar by itself. I'm gonna have Eric do that one. So we're gonna put Eric onto that onto a Fibonacci retracement projection webinar next time. Yeah, probably next week or the week after if we get to it. It's definitely a lot of things that we got to put together to do a webinar on Fibonacci. So thank you guys all for stopping in and hearing me talk for an hour and 20 minutes.